In this video, I'm going to be teaching you how to understand liquidity. I'll be starting from what a liquidity is, the different types of liquidity, and how you can actually use them to set your take profits and your stop loss level. So make sure to watch to the very end of this video. So firstly, we are going to understand what liquidity is. Now, liquidity in the simple definition is that liquidity is the lifeblood of the market. What this means is that the market need liquidity in order for it to move properly, which means any area of imbalance, the market is more likely to go fill that particular area. Now, there are different types of liquidity. We have the trend line liquidity, the up trend line liquidity, and down trend line liquidity. For the sake of this video, I'm just going to be giving you guys the three most commonly used liquidity. Which is number 2, we have the long wick liquidity. Number 3, we have the equal highs and lows liquidity. We are going to identify all these types of liquidity on the chart. So firstly, let's start with the first one, which is the uptrend line liquidity. Now, this is the trade I took yesterday, Saturday. As at the time recording this video on Sunday, I took this trade on BTC yesterday, Saturday. Now, if you watch my video on how to analyze the chart using structured liquidity, you will understand the strategy I use to actually catch this sell, right? Now, what I want you to pay attention to in this video is the types of liquidity and how you can actually use them to maximize your profit. Now, if you observe, the manner at which the market approached my point of interest is that it was constantly creating higher lows and higher highs. The market was constantly creating higher lows and higher highs. Now, as soon as the market gets to my point of interest, just like we said, the uptrend line, the uptrend liquidity, this level at the bottom, the market has accumulated liquidity because as long as it's creating higher highs, higher lows, and higher highs before getting to my point of interest, this, let me put this one at the bottom. That level there, there's a liquidity resting in that particular level. And if you observe, this point here is the first point at which the liquidity started accumulating from. Okay, like that point is the point at which the market starts to accumulate the liquidity from. That was why I used that point as my take profit level, because the market needs to come down to clear out all those liquidities. The market needs to come down to clear out all those liquidity from this very point here. So that is the uptrend liquidity. It's a very simple concept for you guys to understand. Now I'm going to go over to we'll come back to the downtrend liquidity, but I will quickly go to the second one, which is the long wick liquidity, because in this same trade, the long wick liquidity is still in this same trade. Now, if I go to the 4-hour time frame, if you watch my last video before this particular video, I talked about this thing. Is that each time market creates long wick like this, you see this long wick here, this particular one. See this long wick? Each time the market creates long wick like that, especially if the wick has not taken out any liquidity, the market is more likely to come fill this wick. That was the second reason I put my take profit at this level, for the market to come down to come fill this wick. So you see that we have identified the uptrend liquidity and the long wick liquidity. So for the second one, which is the downtrend liquidity, is just the opposite of the uptrend liquidity. So let's go over to the second one, which is the downtrend liquidity. Now for the downtrend line liquidity, I'm going to go over to the trade I took on Nasdaq. Right? It's just basically the same thing. If you observe the manner at which the market approached my point of interest, which is this level here, where I took my entry from. is that the market was constantly creating lower lows and lower highs, lower lows and lower highs, lower lows. Market was constantly creating lower lows and lower highs. Now, as soon as the market got to my point of interest, this upside here, there's a liquidity resting above this upside. Okay, let me put that at the top. There's a liquidity above it, which means the market needs, let me just take it out a little bit so you guys see. There's a liquidity above it, which means the market needs to clear out that liquidity before moving to the up direction, right? Now, my take profit would have been up to this level. I could have got my take my take profit at that particular level there, but I decided to take my take profit just at this other block. So it's basically the same thing. The reason why I was a little bit confident it was that the manner at which the market approached my point of interest, it was constantly creating lower lows and lower highs, lower lows and lower highs. And remember, we say liquidity is the lifeblood of the market. So that means that the market needs to clear out that liquidity. So that is for the downtrend liquidity. Now, for the equal highs and equal low liquidity, I'm going to be using the same trade on NASDAQ that I used to illustrate the one of the downtrend. Now, if you observe, before the market got to my point of interest, the market actually created an equal high or double top, whichever you want to call it, before actually getting my point of interest, right? Now, just like I said in the downtrend illustration, the market did not just come straight to my point of interest. It created these lower lows and higher lows, right? So this equal high now or double top, whichever you want to call it, is actually a liquidity area for the market to actually sweep. All right, the market needs to sweep that particular level. Now let me draw it in a way that you guys can actually understand it to implement it on the chart, right? Let me draw them separately. First, we have the uptrend liquidity. First, we have the uptrend liquidity. The uptrend liquidity, right? The uptrend liquidity is where the market is constantly creating higher lows and higher highs, right? The market is constantly creating higher lows and higher highs. Higher high. You have your higher low here, higher low, right? This one is for the uptrend. Now the liquidity is resting for the uptrend liquidity. The liquidity is resting below it because we have to sell it down because we are selling it down to clear out the liquidity, right? So the liquidity is resting here. We have the liquidity here. Let's put this at liquidity. Why for the downtrend it's just the opposite of it. For the downtrend is where the market is constantly creating lower highs and lower low, right? Lower highs and lower things here. You have your lower high, lower high, and you have your lower low. We have now lower low, lower low, right? Then for this one, the liquidity is resting above it, right? It is resting above it. Liquidity, liquidity, so because this one we are looking forward to actually buy the markets to clear out the entire liquidity, right? So this one is for downtrend liquidity. Okay, downtrend liquidity. And this one is for uptrend liquidity. Uptrend liquidity, right? Then the other one we have the other one we have the long wick liquidity. This long wick liquidity is basically when the market creates a very long wick, right? The market does something like this. Market does something like this, right? So you have a long wick liquidity. You are anticipating to either buy or sell the market to actually fill that liquidity level. For this one, we have the long wick liquidity. Then the other one, we have the double top or equal highs or equal low, whichever you want to call it. You have your equal highs. So now you are looking forward to buy to actually fill that equal highs, right? Here is your liquidity. This is your liquidity on equal highs. So I'm looking forward to now for this one you will have your point of interest above. You have a point of interest somewhere around the your POI. You have your POI because this one you are actually looking to sell the market, right? I'm looking to sell the market. Why this one you have your POI somewhere at the bottom because this one I'm looking forward to this. I'm looking forward to buy the market. So you have a POI is bottom. You have a POI, right? This one you also have your POI at the bottom, somewhere at the bottom. This one you're also looking forward to buy it. POI. If you watched the video to this point so far, do well to subscribe to this channel. So this is it. These are the different types of liquidity and the most commonly used liquidity on the chart, right? So you can take a screenshot of this and always remember that you get to master these things. The more you practice them, the more you master them. So always remember to backtest. You have to backtest every single thing you are learning from this video. Backtest it, it will definitely work for you. So see you guys on my next video. If you've watched the video to this very end, I want to thank you and appreciate you for subscribing and supporting me on this channel. The ideas and the information and knowledge I share on this channel are just basically what work for me as at now in this chat. So 2 years from now, the knowledge I have today is going to be different and it's going to be more advanced 2 years from now. So just thank you very much for subscribing to this channel. And also you can join my Telegram community. It's not a Signal community. I only drop Signal here once a week just to appreciate the people who are there and who is actually building with me on this journey. So thank you very much for watching the video to this very end. See you guys on my next video.